Hi, everyone. Thanks so much for attending today. I just wanted to say a very special thank you for those who are able to attend today in person. We really appreciate that. And also for those who are watching the replay afterwards, we welcome you. And thanks again for, spending your time. Everyone's got choices of what they can do with their time. And we're really thrilled that you got to spend it with us today. So thanks very much. And without involved clients like you, these topics honestly wouldn't happen because, as we find, if people ask questions, we get the experts to actually sit and tell us a little bit about what they're doing and how they're doing it and how they're adding to your financial plan. Um, I'm very grateful to be here today, of course, with my gracious team. That without them, these webinars also wouldn't happen. So I appreciate all of their work, as well as our extended team. Oftentimes, we talk about our extended team, but you don't always get to see them. So today you actually get to see some of our extended team that we work with every single day that actually work on your files together with us. And sometimes you don't always get to see them, and we're pretty excited today to actually bring them to this webinar today and let you meet them as well, and you can kind of see what they're about as well. So without further ado, I'd like to introduce Colin Drew. Colin Drew is the National Vice President of Canada Life. He always helps firms, advanced firms like ours, some of the top firms actually, with Canada Life to move ahead with a lot of these files. He actually helps in the background with a lot of our files, from not only the application of the life insurance, but also liaisoning with the head office of Canada Life through your entire underwriting process. So he actually helps do that with us if we run into a snag or something happens, or clients want us to know additional information, or let's say the underwriters might know some additional information. Colin kind of helps smooth that process in the background and helps us with a lot of those files. And as well, we're bringing today Ryan Marcy, which Colin will introduce. So I'll leave that to you, Colin. Thanks for coming, everybody.
Yeah, thanks so much, Pam, and great to be here, and great to be here with your clients and with the Tower Group. And we're so proud to be affiliated with the Tower Group in Calgary. I'm Colin, as Pam mentioned. I'm based in Calgary as well, and work closely with Tower and their team, and proud to do so on behalf of Canada Life. So just quickly here, a little bit on Canada Life and ourselves before we turn things over to Ryan Marcy, our expert speaker today. Canada Life has been in business for over 170 years, the first domestic life insurance company in Canada. We proudly serve 13 million client relationships across Canada. So 1 in 3 Canadians is affiliated with Canada Life in some way, either through individual products or through their company benefits plan. Just recently, a couple of years ago, you probably caught news about the fact that we amalgamated into a new company, new brand, and amalgamated 3 historic companies: Canada Life, Great-West Life, and London Life, January 1st of 2020, and rebranded under the new Canada Life and one single legal entity, which allows us to simplify some of our processes and systems and how we work in the industry and support advisors and clients. In 2021, we paid out more than $6.3 billion in life and health benefits and contributed over 10 million to Canadian communities across Canada. So those are a few of our priorities at Canada Life. Ryan is going to be here to talk about the PAR fund today and PAR investment strategy. So just quickly on the PAR fund, and not to steal any of his thunder, but our PAR account is at $49.5 billion in assets, by far the largest in Canada. In 2021, we distributed $802 million in participating policy payouts and death claims. So significant size, and size matters in the PAR investment strategy and where we stand there versus our competitors as well. So that was just a little bit on PAR insurance and Canada Life. And as I mentioned, I'm really excited and proud to be here, and especially proud to introduce Ryan Marcy, who I'm so glad that he was able to join us here today and to spend some time with yourselves on PAR Insurance, and Ryan he's responsible for leading Canada Life's large case insurance services team of cross-functional experts who consist of actuarial marketing, product tax, investment, lifeline experts. He's spent over 16 years in Canada Life investment management and has recently made the transition over the PAR Insurance side. So great experience and expertise there. Ryan is based in London, Ontario, where we have one of our head offices across Canada. Ryan is actively involved with his 3 children, coaching and traveling, spends a lot of time with them and with their sports, and is currently coaching Elgin Middlesex Chiefs U11 AAA hockey, so which is just awesome. But so great to have Ryan here as well, and Ryan's going to spend some time today on PAR. So Ryan, without further ado, over to you.
Great. Well, thanks for the kind introduction, and certainly great to be with this audience. Good morning. I know it's earlier there than here in London, so appreciate the time that you're taking this morning to meet and hear about our Canada Life investment story. As Colin mentioned, my role, I lead our large case services team here, and essentially what I do is I have one foot in with the investment teams that manage our PAR account. So how are they investing the assets? What are they investing in? And then my role is to really convey that knowledge, that understanding, really open up what some view as a black box. PAR Insurance is a complicated product in some ways, but it doesn't need to be. There's a lot of really great things happening in the PAR account from an investment perspective, and my role is to really convey that understanding and insight into how we're investing our PAR account for our policy owners. So definitely looking forward to chatting today. I believe we'll leave some time at the end for questions. So please feel free to they can put questions in the chat if there is any questions, and we can certainly get to those as we go through.
Definitely. Yeah, they'll be in the chat and questions section, so whichever one you want to use. And Kelly and the gang will all be here, as well as I am here, and everyone will be here to answer those questions.
Perfect. So really wanted to spend the bulk of my time today really providing that insight into our Canada Life PAR account, how we invest, how we're positioned to succeed going forward, and then really talk about any topical questions you may have from an investment perspective for the PAR account. Really quickly wanted to just take a step back in just refresh. So PAR Insurance, participating insurance, obviously tax advantages to a product like this. You've got your guaranteed premiums, you got your guaranteed cash value, you have your guaranteed death benefit. No matter how the investment markets perform, you have those guarantees in place. The second layer of PAR is, just as the title suggests, participating. So participating in the investment performance of the account above and beyond those guaranteed levels. Also participating in non-investment factors, so mortality, lapse rates, expenses, and taxes. So ultimately, as a policy owner, you're able to get your guarantees, but also participate in the performance of those key factors. Where I'm going to spend all my time today is on the investment side. So really speaking to the investment performance. And you can see that on the left-hand side of this chart here today. We invest, as Colin mentioned, $50 billion in assets. And that generates our investment performance for the account. Now, it's really important to note that for PAR, we then smooth those investment returns to avoid the big ups and downs that you would see on a year-to-year basis. And that generates what we call the dividend scale interest rate, which is published once a year. So just wanted to kind of take a step back and put what I'm about to talk about in context, really focused on that investment performance piece. You can see on this slide here how the Canada Life PAR account is invested in terms of different asset classes. So some asset classes are public, such as public equity and public bonds. Other asset classes are private, so private debt, commercial mortgages, private equity, real estate, and I'll get to those in a second. Overall, though, we're about 70% fixed income and 30% non-fixed income. And again, investment performance of these different asset classes drives that dividend scale interest rate, which drives the dividend that that policy owners would see. So I'm going to talk about a couple different numbers: the investment return, which is the 1-year number, and then the dividend scale interest rate, which I just showed is the smoothed return through time. A couple of key stats, again, as Colin mentioned, the PAR account, Canada Life PAR account, is by far the largest in Canada. So a lot of stability, a lot of strength, close to 50 billion in assets at the end of 2021. And there's a lot of advantages that come with an account of that size, and I'm happy to go into those later if the question does come up. Last year we paid out policy owner dividends of 1.26 billion. And certainly a lot of exciting things happening in the PAR account from an investment perspective, in terms of real estate, in terms of private equity, in terms of our fixed income story. So I'm going to go through those in a little bit more detail and how that can drive value going forward. So how do we manage that pool of 50 billion? There's really 4 kind of key pillars which kind of back our investing philosophy. So this has not changed. So this has been in place and entrenched across the investment teams that manage these assets for many years. So having that long-term performance. I come from an investment background. I used to manage a Canadian public equity fund. And certainly there's always focus on 1-year performance or stretching for short-term performance. In this PAR account, they are investing with a view to invest through different market cycles. So good times, bad times, high inflation, low inflation. So over that long-term horizon, not really stretching for performance on a 1-year basis. The second thing I would say is active management. Every asset class, and I'll show it again in a second, is actively managed. So we have teams that work every day to drive returns. We're not just passively buying an index fund and sitting back. They're actively working to add value. The third thing would be diversification, obviously across asset classes, but just as importantly within asset classes. And this is a big difference for Canada Life PAR. 50 billion, you can spread out risk across many, many assets within each asset class, and I'll speak to that as well. And then the last thing is the focus on quality. If you look inside this, black box, we're very proud of the assets that are in this account, and I'm going to show a glimpse into some of those as we go forward. When you have that long-term philosophy, we have shown the ability to withstand many difficult markets, and you can see on this slide, this is PAR dividends that have been paid through some very difficult market environments. So we've been in the PAR market. We have not left the PAR market since we've been in the market since 1848 and have not left. No other PAR company has that track record. So very proud of that history. Very proud of the teams that invest this money. And if you have not seen our financial facts document, I highly encourage you to reach out to Pam to get that, which really has a lot of great detail in terms of how we're investing in each asset class for the PAR account. So one question I regularly get is who actually manages the assets in our PAR account? So I would regularly meet with these teams, and you can see that fixed income piece on the right-hand side. So public bonds, private placements, mortgages, internal teams. So internal Canada Life teams that have been around for decades, very well established. And then on the left-hand side, you can see the non-fixed income asset classes. So private equity, public equity, and real estate. And you can see there, it's a mixture of both internal teams such as GWO Realty, and then external asset managers, which I'll speak to more in a second, but very very established, very long-standing teams in place that manage our power account assets. So last year we did announce a shift in the asset mix for power account to 30% non-fixed income. So 30% real estate, private equity, public equity, and that was a 5% shift, which was over a $2 billion shift in our asset mix. And you can see on the slide here, that was really just the most recent evolution as to how we're investing our power account assets. There's been lots of exciting additions and changes over the most recent years. In the real estate front, we acquired a company in the US called EverWest, which does all the US real estate investing for the Canada Life power account. We also began to develop real estate. So the GWO Realty team has a long track record of real estate development. So the power account also develops real estate, commercial real estate as well. We've continued to grow our exposure to alternative assets, so private equity, private debt, which are obviously, difficult for a policy owner to generally get exposure to. So we've continued to add exposure there. We shifted management of our public equity assets to Putnam and Mackenzie, which are under the Power umbrella, really trying to take advantage of our ties to the Power Corp. And Power Corp is obviously an industry-leading firm, and we've worked hard to really try to maximize our ties to the Power Corp for the power account. So lots of activity, with the latest being this shift to 30% non-fixed income. And you can see it on the slide here. We announced this early last year, moving to 30% from 25% in non-fixed income, which we achieved. We had targeted kind of hitting an interim mix by the end of the third quarter, which you can see in the middle column there. And we will continue to grow our real estate and continue to grow our private equity exposure going forward. You can see some of the firms that we invest those non-fixed income assets through. So we're very excited that we've reached 30%. We're very excited the firms that we're investing in within these asset classes, and certainly good long-term track records of performance for these asset managers. So really excited about what this means going forward for the power accounts non-fixed income assets. I wanted to provide again a glimpse. So inside the power account. So in real estate, we have 77 physical commercial real estate assets, which are owned by the power account. No leverage. These are not leveraged assets. These are fully owned assets with no leverage. Well diversified. You can see this is just an example out of the 77 assets. You can see well diversified in terms of where they're located, so by geography, as well as what type of real estate. So there would be industrial real estate, multifamily residential real estate, retail real estate, office real estate, retirement homes, etc. The other very unique thing about the real estate team is what I mentioned a moment ago, is that they don't just go and acquire an asset. They develop some assets, they acquire some assets, they then do all the ongoing property management, ongoing leasing, so add value across the full real estate spectrum. And again, very proud of the assets that are in here, very high quality assets that are in the account. I wanted to also provide a quick glimpse as to a couple of recently acquired real estate assets. So these would have been acquired by the power account within the last 3 months, well, in the first quarter of the year. So this first asset is in Vancouver. It is a land parcel opportunity here to build a 32-story structure. English Bay neighborhood of Vancouver, very low vacancy rates, opportunity to continue to raise rents. So a great opportunity for the power account going forward. Another asset that was acquired by the power account this year is this multifamily residential property in Seattle. So this is a 142 unit rental apartment complex. As I mentioned, in Seattle, Class A property, urban location, 2 4-story buildings, great location, strong walk score, close to transit, close to the beach, close to parks, shops, restaurants, etc. So again, these are the type of real estate assets that you would find within the PAR account. Another key part of our story is private equity, and we have a target weight for private equity of 4% for the PAR account, and we continue to strategically invest within private equity. So in private equity, we invest in Canada through 2 companies called Sagard and Northleaf, which are very strong private equity firms here in Canada. And then the bulk of our private equity investments are actually through US private equity partners and firms. Think of the biggest and best US private equity firms that are available. Those would be the partners that we're investing through for the PAR account in the US. And you can see on the slide here, we've committed close to $1.4 billion for the PAR account to 27 different private equity funds. And as those private equity funds go and find private companies to buy, they'll call our commitments. So we'll continue to grow our invested amount as those private equity funds find opportunities, and we'll get to that 4% private equity target. This is an example of an actual private equity fund that the PAR account is invested in currently. So one of the 27 different private equity funds. So Sagard launched this private equity fund in 2021. It is focused on Canadian mid-markets, so smaller sized companies that they're going out to buy. Not looking for cyclical companies, but rather less cyclical sectors such as services, financial services, manufacturing. The first company that they acquired, which you see on the slide here, is a company called Groupe Lutech in Quebec, which is one of Quebec's largest equipment rental companies. So we committed to Sagard. They're now going out to invest in these private companies, and we'll continue to invest in this fund as they grow their investments in these private companies. The other really exciting part of the Canada Life investment story is our fixed income story. And as I mentioned before, fixed income is still 70% of our overall asset mix, and that would be public bonds, private placements, so private debt, and commercial mortgages. And $50 billion account, we have significantly diversified within those sectors. So within private debt, we have more than 300 private debt assets in the account. Within commercial mortgages, we have more than 600 commercial mortgages within the account, all investment grade focus. So again, maintaining that commitment to quality when they're originating, when they're investing. I spend quite a bit of time really digging deep into each of these asset classes, how we're investing for PAR policy owners, how we're positioned differently than peers. And again, really important when you look under the hood, how are we invested in each of these asset classes? One of the key differences for the Canada Life PAR account is that commercial mortgage team and exposure, which is obviously a form of private fixed income. Very established commercial mortgage team, more than 50 years of experience. They've got offices spread out through Canada. They know their local markets very well. When I first met with them, when I moved to the insurance side early last year, they were talking about how when COVID first hit, a lot of commercial lenders were pulling back. They were actually able to source several attractive assets that, the spreads had moved wider. They got access to these great assets as other lenders are backing away given the uncertainty. But they know these markets very well. They know these companies very well. and we're able to add value in those uncertain times. So a very long track record. They're also unique in the sense that they can lend very large amounts. So they can lend up to $250 million on a commercial mortgage, which is, there's not as many companies that would do that. Other insurance companies, yes, but banks typically wouldn't be competing in that bracket. So very well positioned to add value in those larger commercial mortgages. And again, if you have a $50 billion account, you can spread that risk very well. Very well diversified in the mortgage space. I'll show an example in a moment here, and then a good long-term track record of performance. They've done this for many years. They know how to originate and underwrite. And the last default on our commercial mortgage portfolio was more than, I believe it was 24 years ago. So again, a very strong process in place to withstand difficult times. So this would be just, again, a single example out of the 600 plus commercial mortgages that are in the account. This is a commercial mortgage that was originated late last year in Kelowna. This would be a close to $100 million commercial mortgage, Orchard Park Center, right in the heart of Kelowna, 98% occupancy, great central location. So again, this is just an example of one of the numerous commercial mortgages that would be in this account. I mentioned briefly about private fixed income. So you know, private, not public, so not public bonds, but private fixed income. So private debt and commercial mortgages. You know, very great exposure, very strong exposure that policy owners get when they invest in the Canada Life PAR account. These are not easy to originate. These take teams to originate, to find. The benefit of private fixed income is you get a better, get the potential for a better return, with the trade-off being less liquidity. So they're not publicly traded, but better return potential, less volatility with that trade-off of less liquidity, which really fits well for an account like a PAR account. And through Canada Life's PAR account, as you see, really industry-leading exposure to private fixed income. The other really unique part of our fixed income story, and this is really interesting currently, is our 10-year ladder, which, to simplify it, essentially means that 10% of our fixed income assets mature each year. So 10% of our fixed income assets mature, and then we go invest it in the market. So what is the market rate that we can get on those fixed income assets? And what that does is it provides responsiveness to changing interest rates. So everybody, I'm sure, is very aware what interest rates have done, both on the down in terms of decline, but also the interest rate move that we've seen this year. So our Canada Life PAR account, having a 10-year ladder, provides that responsiveness to interest rates. And you can see on the slide here, although we've seen a move higher in interest rates so far this year, this slide doesn't really capture that. We've still seen quite a bit of a decline over the last 20 years. And with that 10-year ladder, on the right-hand side here, you can essentially see that Canada Life's PAR fixed income assets are now all invested. We've rolled them all over into a very low interest rate environment. So as rates start to rise from here, we would expect to see upward pressure on our returns. The very unique thing about PAR, and I found this really fascinating coming from the investment world, the really unique thing about PAR is that PAR for fixed income only is concerned with the coupon or the income. So what's the interest rate that you're getting? The price change on fixed income assets isn't captured in our DSIR because we generally hold fixed income to maturity. So unlike a bond fund or a balance fund, which is going to be hit in a year like this year where rates go up and bond prices go down, rising rates are a good thing for PAR. rising rates are a good thing for PAR because we don't capture the price change, the negative price movement for fixed income. So a really key important part of the PAR story is that rising rates are a good thing for PAR, and really that's a differentiated part of the story for PAR relative to other investments out there. I won't spend much time here. This is just that 10-year ladder dynamic. You can see on the left-hand side, the 10-year ladder, you're going to see more responsiveness as rates decline. But then the reverse is true. As rates start to rise, like we're starting to see now, we would expect to increase our returns quicker because we're reinvesting more into the current market environment. This is a chart which just shows that dynamic. So for years, interest rates were falling, and fixed income assets in our PAR account, which are the orange dots, would have to be reinvested at whatever the market rate is, which was a lower rate for many, many years as rates continued to decline. And the really exciting thing for us is that we've started to see rates move higher. As you can see here in January and February, the interest rate level that we're able to invest our maturing assets in is actually starting to be above what's maturing. And obviously this wouldn't capture the significant move in rates that we've seen since January and February. So again, we're now reinvesting at a higher interest rate than what's maturing in the PAR account, and that's a good thing. Rising rates are a good thing for PAR. So wrapping all that together, how did the PAR account perform last year in 2021? You can see on the slide here, the total return on a one-year basis for the PAR account last year was 7.5%, which was more than double the previous year. So very excited about that return. Very excited about what rising rates mean for the returns for public bonds and private placements, as well as mortgages on the side here, and what that can mean for the account going forward. Very quickly, how does that 7.5% return compare to some of the other PAR competitors? I won't spend a lot of time on this slide just because it is very technical and detailed, but we are very proud of that return. You can see here that there is some discrepancy in terms of how other companies report their numbers, but that 7.5% return fared very well relative to other PAR accounts last year. So that is the one-year investment performance number. And I showed at the very beginning of this slide deck the dividend scale interest rate, which is the smoothed investment performance. And what we announced this year about a month and a half ago is that the dividend scale interest rate for the Canada Life PAR account is increasing this year by 15 basis points for the open PAR account. And this is the first dividend scale interest rate increase for Canada Life, I believe, since 2007. So the first time in 15 years. And really the first dividend scale interest rate that we've seen across the industry for several years. So very excited about that hopeful inflection in the dividend scale interest rate as investment performance continues. Key drivers for that dividend scale interest rate, as you would expect, I just showed very strong non-fixed income performance last year. The changes to our investment strategy, which I spoke about earlier, where we added more non-fixed income exposure, and then that start that we saw with increasing interest rates, which began in the second half of last year, which obviously helped as well. So some key drivers in terms of what drove that performance. So that is kind of the background that I wanted to go through, and hopefully that provides some good insight as to how we're investing. Hopefully it provides confidence that these teams are really working hard every day to drive value. And again, very exciting moves that we've seen in the interest rate market, as well as moves that we've made from an investment strategy perspective for the PAR account going forward. So maybe I'll just pause here very quickly. happy to take any questions, happy to go through any of these questions. These are, these would be some of the types of questions that I regularly would receive. I would regularly meet with high net worth, large case advisors, wholesalers, and clients. And, I would regularly get questions like these questions, but happy to go through any of these questions. Also happy to, pivot to any questions that this group has, because happy to tackle any questions in that order. So Pam, maybe I'll turn it over to you, Colin, to see if there is any questions, and we can kind of go from there.
Yeah, sure. I'll just check in with Trish, who's moderating this session, and behind the scenes. Trish, do you have any questions that have come through, questions or chat?
Nothing yet. So if you have any questions, everyone, get them into the chat for us, and I can get them over to Ryan.
Yeah, and I think, Ryan, your presentation answered, I think, proactively covered a lot of that content and common questions that we face. One definitely is inflation, right? Like, I think obviously we have to move through some supply chain issues to get things working smoothly that way in the world before we see true inflation numbers. But absolutely, if you could speak on the impact of inflation to PAR assets, that would be great.
Sure. So this is probably the most topical question right now that we get, and I'll show a couple slides in a moment, but you really have to take a step back. So we've seen inflation rise dramatically, and what we're seeing, as you would expect, is interest rates following suit higher. So we've seen a dramatic move off very low levels in interest rates this year. And if you focus on fixed income, which I mentioned is 70% of the PAR account, and I spoke to this in the presentation, higher interest rates, whether that's driven by inflation or not, is a good thing, because we can then acquire new assets at a higher coupon level, and we're not negatively impacted by the price change like I talked about before. So again, if inflation is driving rates higher, which we're seeing this year, that is a good thing given the uniqueness of how we treat fixed income in the PAR account. So that would be for 70% of the account, and you can kind of see that on the slide here. This would be the late 70s, early 80s, where inflation, the blue line, really started to march higher. You saw interest rates follow suit, and you saw that upward pressure on the dividend scale interest rate, and you can see the longer term perspective there. So again, if rates are moving higher, you're going to see that support for fixed income. I would mention back in the late 80s, these PAR accounts would have been essentially all all fixed income, not non-fixed income. So probably more responsiveness to this dynamic back then, but even now we're still 70% fixed income. So definitely well positioned if rates continue to move higher because of how inflation is moving. On the non-fixed income side, so the bottom half of the slide, which is 30%, as I mentioned, you've seen how markets have reacted this year. So public equity markets are trying to come to terms with what rising rates mean. I would say for public equity markets, rising rates, and you can see it this year, really will dictate which parts of the markets perform well. So the TSX this year has done much better than the NASDAQ or US growth. Canada Life PAR account is well positioned. We're 75% TSX focused. Value as a style has done well in a rising inflation environment relative to growth. Again, Canada Life PAR has a good mix of value and growth. We're not all in on one style. So I would say public equity markets certainly can be pressured by rising rates, but again, important to look kind of below the surface as to performance within the space. Real estate, we met with the real estate teams probably a month ago. They have not seen cap rate negative impacts to cap rates yet from rising interest rates. They had a good return, a 4.6% return for our real estate portfolio in the first quarter. It'll be interesting to see how the real estate markets react. But again, you know, when we met with the real estate teams, they talked about the fact that even if cap rates do move higher, how are you positioned within real estate? If you're focused on urban markets, very tight, you know, industrial and multifamily asset classes, you're going to see a lot less pressure than if you're invested in suburban office, for instance, or Class B office, which would be much more impacted. So really important to kind of take a look below the surface as to how you're invested in those non-fixed income asset classes. So I would say the jury is still out, but we're quite optimistic as to what this rising interest rate environment means, and really this higher inflation environment means for the par count.
Thanks, Ryan. And I think there's been a little talk about different taxes coming into banks and insurance companies. You know, obviously we're early in that, but do you have any commentary related to that, related to the par account?
Yes, we do. I have got this question a couple times. Let me just pull it up here. Unfortunately, it's not a concrete answer as of this point. When I connected with our par pricing team when this first came out, there is the potential that this new tax could apply to the par account, but at this point there is no confirmation or granularity as to what it even means, whether it even applies, and so we'll have to unfortunately wait and see what it means. At this point, I don't believe it's even been approved fully in Parliament yet. So at this point, certainly too early to say what it could mean for the par account.
Okay, perfect, agreed. I think Trish, any other questions that you might have?
No, nothing.
Okay, perfect. I think that covered a lot. Like, I think you know, we'll obviously continue the conversation with all of our clientele. You know, I think what we covered today is the deep dive into the participating account and the investment breakdown. Obviously, this is an important tool for our financial plans. We're growing wealth, having significant tax advantages, and it does definitely contribute to a well-balanced net worth picture or net worth map. So another big strength is just the flexibility and the accessibility of it. So I think, you know, we definitely appreciate the involvement of Canada Life, Colin Drew, and Ryan Marcy. We really appreciate your attendance here today and your presentation. It's been full of solid info, and we really appreciate all of our clients for attending as well. So thank you so much, everybody, and have a great day, and watch for more information that we'll bring to you.
Thank you, everybody.
Thanks, Pam, Kelly, and everyone else. And Ryan, take care.
Thanks.
Bye.
Thank you.
I know.